What is going on, everyone? Welcome to Monday, June 1st, 2026, Trading Trends with John Salama, CMT. What a day. Let's get into it. First things first, we're having our Amplified Alpha meetup next Wednesday, or it's June 17th at Ulysses in New York City. And also, I will be out next week. So I'm going to try and do 3 videos and Substacks articles this week to keep track of these crazy markets. And then we'll go from there. All right, let us do the screen share here. A lot going on. I did this about 30 minutes ago, so some of this may have changed a little bit in terms of when we go live, but for the most part, they will be true. Here we go. Let's get into it. Utilities. The talk of the day is really a big move in bonds here. Utilities really moving adversely to the downside. Big move in bonds. A lot of the fixed income short term, like the 2-year equivalent ETFs and fixed income, hitting 52-week lows today. Obviously, oil, we'll get to some charts here, but oil is ripped up about 7% on the whole Iran news thing, saying they're not agreeing to negotiations or whatever it is. Today, the news was. I just look at the price action. So oil ran up here 7%. Looks like it's going to be sticky for a while. The Fed can't cut. And the bond market, very smart, astute market are the bond traders, and they are saying that the 2-year yield, the shorter term, is rising. Oil and Taiwan, big rally. Taiwan continuing to rally. I'm in EWT calls. Friday was my target exit date. It's looking great. I do have an order in to exit at least half my position for to get out at a 2x for half your position, and then you let the house money ride. New all-time highs for the Qs, emerging markets, XLK and tech. South Korea, I'm in the stock. Taiwan in the calls, and cybersecurity. Looks like the market is betting on, to an extent, cyber warfare. The cyber stocks have been looking incredible. We'll see if it's one of our charts of the D. All right, let's get into it. All the things and nothing, honestly, that does not matter. Let's go right to the dashboard panel. I do also want to share the volume today is almost comical here. It's pretty low. We're at 24 million shares here, doing this at close to 2 o'clock. So that's very low. We've been averaging 46, so almost holiday-like. June, my favorite month. Summer is here. It's upon us, and it looks like the traders are letting you know as well. Total digestion, very low volume day. Let me get a dashboard panel here. It's been May was fantastic. June is looking also turnaround earlier in the day. But first off, Micron, oh my goodness, up 7.5% to 1045. Insane. Nvidia percent on the news that they're making PCs now. Jensen Huang said they have a new product coming out at the end of the year besides Blackwell. We're not going to tell anyone. Now they have this PC thing. Multi-trillion-dollar company and counting, up 6% today to 223, and you all own it because it's in SPY, which pretty much everyone and your uncle and your aunt and your mom grandmom has exposure to. Microsoft up 2% to 459. Tesla down 3, Intel down 3, Meta down nearly 4, Amazon down 3, Broadcom up a big 4, Oracle up 9.5. We're going to talk about software. We'll look if the correction was over. I said before, be a lazy trader on it. Wait for a break above the 200-day. I said it looks like it's getting close. And today, teaser alert, looks like it's happening. When you do, to me, when that happens, that's when you want to go underneath the hood. When you had a structural recovery like that, then you want to pick your bets from the stocks within, like your ServiceNows, your Workdays, your whatever, the junk that was in there that got beat up. They probably ran up a lot here. They're probably going to go up a lot more if this move is for real. Apple down 1, Dow up a monster 8.5% after that massive earnings beat last week. Palantir up 4%. Taiwan Semi up 6.5%. That's why I'm enjoying massive gains today in EWT, much because of this, and it being its top holdings. And Marvell, my goodness, up 9.5%. So the semis and especially software on fire today. Low volume on the day here. Here was the opening bell at 9:30 a.m. Really a slow ascent towards 11, where we finally broke above view up at 11:30 around the European close. And we're making highs of the day right here as we speak. 760.31 was just hit just seconds ago here. So as I zoom out, that would be a new all-time high yet again in SPY. Just amazing as I zoom out. That's the more important piece as Rocco decides to try and leave the room. You want to want a piece of this? No. Sometimes he recommends buying like XLE calls. He's an interesting cat, but he's a dog. Just the overbought behavior from 60 to RSI going back is amazing. 6 weeks now above that reading. Very, very, very strong appetite of buyers, and that price spot equivalent was right around that breakout, around 700, actually closer to 695 in April, and now boom, you've pushed all the way through 760. So more importantly, right here in terms of the where are we here now? Again, in terms of the cycles, and what I was looking at in terms of dates, I still had seen the bullishness lasting through the end of this week with a target on or around that 755 mark. You're getting a little bit more expansion here, obviously, in the Bollinger Band due to this extreme confirmation of momentum of a 75. That's great. That tells you that it can very well go a bit longer here. So you're going to move that upper band to right here. I have it down to 762. So, in terms of risk reward, chasing right here, it's about 3 up and maybe about 19 down on a pullback. But again, the way you do this is on a buy or on a breakout system. Again, look at all the green days too for just SPY. This isn't IGV. This isn't the Qs even, or a specific, XLK. This is SPY, and this has been green every day since the 20th, albeit one. Okay, and that was basically a flat day. So amazingly strong tape. 75 RSI ever since the ceasefire. A lot of things changed. Today, we'll take a look at the charts because oil having a big day. But anyway, really fast. So I still see bullishness. I'm not getting rid of my calls in Taiwan. I don't think yet, but we'll see if I get paid for it. Then perhaps, like I said, the order is in for a double. So again, a bullishness target around 762 or so, possibly just because of the momentum. And again, the VWAP on the day, 758. They love that, and we're hitting highs just about a few minutes ago in SPY. So bullishness through, like I said, the end of the week, and then I do see a pullback to about that 740 level. And then more than likely, probably new all-time highs right around America's 250th birthday. Oh my goodness, I'm sure the Don's going to have a great time with it, maybe even in the octagon outside the Great Lawn. All right, what the senses I'm sure my grandparents always dreamed of. All right, let us get into the big movers of the day. The first one, the bell of the ball here to the upside. Bonds was to the downside. IGV, a massive thrust, up 5.5% when I wrote it. Here it is, 5.75%. IGV, I had said all along, same thing as when I recorded the death, chalk outline was right here at the beginning of the year. And then it really got cemented once you broke below par or 100 here, January 15th. This really fell out of bed, not only because you were under a 200-day moving average, but it started to go lower essentially, and you had a breakdown to multi-month lows. I believe that was basically a 6-month low when it pierced under $98. It bottomed on a bearish divergence here April 10th, a week before, I believe, the ceasefire had an ugly, topping process about $89 here, never got overbought, and now there is massive catch-up trades. Look at the candles, still gaining strength, still huge. Today's candle, $4 or so wide, a $3 ATR in here, so absolutely trading, 1 year chart, trading in terms of massive volatility, in terms of expand. Rock wants to exit the room. He doesn't like software, so every time I leave, I think it was Chewy. Chewy was the 52 blows. Rocco. They sent him birthday cards and such, so he likes them. So this is software. I'd say be a lazy trader for this and wait. So I would think the perfect way to do this, obviously I'm going to see a couple of holds above $99 clean. Obviously it looks like it has it. And this is above the 1 year 50% Fibonacci retracement level, which is right around like $93, something like that. So this looks great. This is trying to eye 52-week high struck from the end of September at $118, just $10 away. These candles will let you know when they're getting tired. They'll start getting, this one's $5 wide. This one was $5 wide. It'll start to obviously be $2 to $3 wide, $1, and then you'll start to see red exhaustion, type deal. But amazing trading and software, as I've been saying. Respect the trend, the reversal it's had since mid-April, and now obviously it looks late, but if you're still a buyer, this is when you can make a lot of money in the single names itself. Obviously, if you're buying this on a breakout system, which I am considering and looking at, it's very overbought. 81 is obviously extended, but candles look like it can go further. Only way to do this is buy this on the ATR. It's 3.16. Austin 316 told you so. So that 2x is 630. So you buy it right here, right now. If it goes down to 101.20, you get out, because it could very well go to about $92. Just get out. It's going to take a little more time. Otherwise, enjoy the gains, because it does look like next stop would be I mean, 110 and then 113. And then obviously you can do the dance from there with the 52-week highs. But we'll see how long it goes there. So that would be my only trade in terms of calls. They're going to be super duper expensive, but you can look at, the September's, 115s or something, but they're going to be really expensive. I would sell something against it, forward month. All right. The next thing they're buying big time because of the Iran news was oil. Okay. The market is dealing with it. Oil, it was up more earlier, up 4%. Look at that candle today. This little reverse hammer action. We'll see where it closes. The view up on the day is 134.82. It's underneath that right here, right now, and that's why it looks like that with an extreme tall shadow. This thing traded on the fear as high as 139 today, and then they sold it down $5. It's got $3 away from the low. So right now, a critical point. This is basically what they're determined to be worth. Up 4% on the day. I've been saying I see this basing this week with somewhere potentially a low as a 127. It was there on the 29th. It got to 126.5. I would really want to see where the tape goes, even on low volume for the next 2 hours on this news. Where does it close? We are also under 50 RSI for 5 consecutive days, which it hasn't done since, honestly, 2025 type action. So let's see if this is a bit of a change here we got, global growth all over the place happening. But obviously what's going on in the Middle East as well. I would wait for this to base. My point is wait for this to base. I think it's going to be a pickup around 128, ideally. I think you could easily get to 138, which is basically where it got to today. And if things really go right, which is basically wrong geopolitically, I do think this still targets very close to 153. I've not seen a lot of things to throw the towel on oil by any stretch just yet. It's resolved higher very nicely. Boxy springs, if you will, which of course is a technical term. May 18th, it peaked at 154. It sounds insane to think it can have new 52-week highs. But again, with all the straight moves, closure, again, we'll get to this when we talk about bonds. So let me not chase my own tape ahead. But we'll get to it next. Taiwan is the next one, and that's what they're gobbling up today. Software, oil, and Taiwan. This is a new all-time high for EWT, 72 RSI. Basic strength, similarities with S&P green every day since the 20th, albeit one. Look at this. They got underneath the 50-day. Was this a 21? It's a 20-day moving average for basically maybe 5 minutes, and they gobbled that up on May 19th. This thing's had extreme strength ever since this breakout, April 10th. Again, the week of the ceasefire, a lot of risk appetite. It's got bulled up in different parts of areas, the world, and whatnot. I am in the calls for this. They are the June 105 strikes. I am $2 in. Like I said, I'm very likely I'm not going to be greedy. We'll see. I'm probably going to sell half the position at the double, so I take my money off the table with no risk. Or if it's gotten way beyond my target, like I said, my target was 105 right here live. I'll up it to about 106. But we're still exceeding that by 1%. The chart looks fantastic. We'll see. That's why the good idea is that we need to buy an even number of contracts and options. You can sell half and let the house ride. EWT looks great, though. Like I said, bullishness for this part of the globe, it looks like through the end of the week, possibly a 110 reach. I would love that, obviously, for my options. Losers today. Only two really in a multiple sigma manner, and they're obviously due to the same thing, and that's because bonds are getting absolutely dumped. Utilities, ouch, down 2.5%. This is ugly here. Utilities peaked February 27th at $48, back when there was snow and frigid weather on the ground, if you remember those ugly days. And now it's really been testing utilities in mid-May and ugly behavior. This is what I'm talking about in terms of oil. When your old battle line, that's the best as it gets, is neutral. So this got to 50 RSI, and not a soul said, you know what, at 45.5, let me really bid this up. They said, no, thank you. And now you have a 200-day moving average that is rising. It is starting to flatten out here straight up at 44.5, and now it's closed beneath that, a handful of days in the last 2 weeks. So don't love what I'm seeing in utilities. Obviously, I've been saying higher for longer is now higher forever. And we'll look at the 2-year ETF next. But this looks like it has possibly, we'll see, the bonds are really moving today to the downside. Possibly this has another move higher to 45 even. But this is an ugly looking candle. I don't like the lows here. Nearly 4-month lows in the utilities here. So we'll see. This old support of 44.5 now looks like it may prove to be resistance for quite some time for utilities. Could be like a new normal. Speaking of which, So let's talk about it. Higher forever. SHY, this was the liquid 2-year, essentially. So 1 3-year Treasury bond shares. Again, this price hits lows, meaning yields hit highs. A nice little decent candle here in terms of it hit a low of 81.94. That's a 52-week low, and then it bounced small at least to 82, which is a cent above VWAP, and that's why you see a little bit of a hammer here. But horrendous looking chart. This essentially, like I said, is a 2-year bond. It peaked February 27th. We were just talking about. Look at that, the move with utilities, which is obviously significantly correlated, and bonds just like a a yo-yo fell off in mid-March, a week into this war, and they said, let me liquidate bonds. No, thank you. Oil's going to stay higher for longer, and it's going to put the Fed in a hard place. They could not cut, or that will throw us into absolute hyperinflation. If anything, they would have to hike. I'm sorry, yeah, and if anything, they'd have to hike. And ironically, not so ironically, I got stopped out of my real estate position today because when bonds hit 52-week lows, that's going to yield very weak, horrendous mortgage appetite. And real estate traders understand that, and they sell, and then when they're done, Mortimer, they sell again. So that's what's been going on with real estate. Got stopped out and out of IYR, no harm, no foul, and that's why we have the stop loss system. Bonds, they've tried to etch a couple of green days in a row here since the 26th. Look at the ugly rejection here at the what is this? The 50-day moving average. That's the best it could muster, from 82 to about 82.35, bit decent in bond ETF terms, and then an ugly rollover to 52-week lows. In terms of this here, I don't like what I'm seeing. It may have been a little bit overdone in terms of 82 to nearly 81 handle. That's a big deal for SHY. Again, this is a 12 cent ATR on $82 stocks. So understand, this does not move. It is literally a fixed income ETF, as I said, the 2-year. I wouldn't be shocked if some buy this up and try to make a move to about 82.10, 82.15, something like that. But overall, the next 2 weeks, I do think this is headed lower, potentially testing a floor of as low as, something like 81.5, meaning bonds prices go lower and yields go higher. So a little bit more continuation of the tape that you've seen today. Woo! All right, let us get into top 3 gainers of the past 5 days. Oh my, I'm so happy I am in this. On Young again. South Korea, the top gainer of the past 5 days, averaging 3% a day. Oh my goodness, today up 6% nearly to a new all-time high, 72 RSI. This thing will not get tired. It's AI memory. Oh, who knew there'd be money in that? Who knew that would be a margin business, AI memory? I think that was the plot of like Terminator. So this, again, bullishness through a lot of cycles. This is no different through the end of the week. My target, this is getting very rich, obviously, was really around 210. Okay, and this is why we deploy a stop system. Okay, for this, it's massive. It's $9. Had you listened and taken my advice, I think 3 days ago, I had the trigger on this when I said I love when this triggers and I share the I bought. It was on May 22nd around 185. So right here on the way back up, yeah, right before this gap, after this low, May 22nd right here, above VWAP on the day, actually, which was 183. I got it 185-ish. And here we are, and we use the stops, okay? So you can do that right here, right now, on the all-time high. You're not late. It's okay. If you are, you're going to use this system. So 2X is pretty wide. Obviously, it's $9, but you give a leash, a dog, a crazy pit bull like this, a leash. I like pit bulls, but I'm just saying. So right here, it is $18 on a 2X. The math is easy. It's trading 218. So there you go. If it goes to 200, get out, because it's very possibly getting to that 185 range, maybe even 175. Probably not, but you would get out. Otherwise, enjoy the gains. Candle looks great. View up on the day is 215. They're above that by 1%. So they get absolutely degened out, plus the growth of EWY versus DRAM. There's all kinds of things going. Basket trading, and it's wild. It's a place to be. I told you probably the best way to trade it. You can go out and buy September calls, but I think they're wide spreads, illiquid, and I mean the thing's pricing in massive moves a day. We did this already, so I don't want to kick a dead horse here, but the number 2 mover of the week, and I already gave it its flowers, is software in the opening, up 14%, basically almost like this, or nearly 3% a day. Today doing 2X that. So they're loving South Korea, which is AI memory, and they're loving software. So very selective, cracked out rally today while they're saying no thank you to bonds. So this isn't your grandfather's market, I suppose. But again, just crazy. This thing, again, was oversold. Nobody could find a buyer for this thing in late February, and now it's 81 RSI. So absolutely astounding comeback in IGV. We told you how to play that one as well. In case you don't remember, it is $3 and about 20 cents. So 2 times that is $6.40. So $6.40 you get it right here. Those candles are not getting tired yet. So again, if it gets to 101, get out because it's probably going to 98, maybe even 95. Otherwise, enjoy the ascent towards 110 and possibly even higher, as folks obviously gets FOMO in this area, this part of tech. And number 3, I'm in this. They've lagged recently. I'm talking very recently. Like as in short term, but ARKG. Actually, look at that, 52 highs today. I want to pyramid into this again. It's not moving as much in my portfolio like a South Korea is or the Taiwan call, so I barely even noticed it. But there you go, ARKG number 3. There you go. That's why we follow trends. Up 13% over the past 5 days, or nearly 3% a day. Not as strong as the past 2. Again, rates ripping is not really super helpful for a super high growth area like biotech, which ideally need lower rates, but this has not stopped this group. I got in like midway of this ascent, and this looks absolutely astronomical. Like I said, when ARKG and the biotechs move, they move, and you can correspond that to a break of the 50 line, the neutral line in RSI, and that's when it really gets its strength. The candles stay the same size, essentially, even getting bigger here with a 6% rally last week, and voila, 52-week highs. I think this one also has bullishness through the end of the week. My target had been around 34.5. So this is, I'm very happy. Again, look at all these green days, not one red one since May 18th. My goodness, going on a semis-like run. Amazing. Since underneath the 200-day moving average, too. So in my head, immediately you're seeing the rubber band go all the way slingshot style, going back the other way. And in terms of spot representation, that's 28, a leapfrog to 35 with a hammer. Just to know in the action today, hit 33.64. They said mine. VWAP 34.61, and they said mine. It's a bit above that by 1% to new 52-week highs for ARKG. As I zoom out for a max chart here, next area, this could be going towards, $47 or those 2022 lows. So, or those spring 2022 lows. So we'll see. Interesting things happening in ARKG. I'm glad to be in. Candles look phenomenal. Top 3 losers of the past 5 days. Some interesting notes here. The biggest loser, of course, when we're talking about global all-time highs, we are, of course, looking at kicking volatility down, and volatility down 7% in the past 5 days, or nearly 1% and change a day. Today up 80 bips. It is oversold currently, down 28, down to a 28 RSI. Just slow death here. You had a bit of a melee of hysteria here, of worry quantified here through the data visually, truly from March 7th, the week of the war until that ceasefire. That was it. That 1 month correction or explosion of volatility led to all those inversions of markets, and now we are reverting the other way across sectors, across geography. So here we put in all-time lows on May 29th. I see VXX bottoming. As I said, I'm looking for global bullishness through the end of the week. That would be bottoming for this asset through the bottom of the week, somewhere around 24 handle even. I think it's pretty close here. Again, the low from the other day on the 29th was 23.85, so I don't think far more than that, although a piece of crap asset here with a sub-30 RSI, so they sell and ask questions later. Just one green day in volatility. This might be the second since May 19th, so my goodness. And I'm looking for a rally over late June on some kind of hysteria in the market, just to about 27 for this. And then it would continue its ascent lower as we would garner more all-time highs in the markets. Number 2, and I hate to see this correlation, Bitcoin doing some ugly things, and I hate to say it, I'm probably going to lose subscribers and have some hate comments, but it's just correlating with ugly assets. This week, it's having the same return on a short time frame of Bitcoin, of volatility. They're just selling it. It had a very paltry, pathetic rally. Not as bad as what we saw. What was the other one? It was the asset before volatility that got to barely anything. Here you got to almost overbought in early May, represented by 47 in IBIT, and having an ugly rollover. Today, 40.56 is VWAP. It's under there. It's down 3% today. It's down 6% in the last 5 days. The second worst place to be after volatility. They're not selling a lot of assets here. We are in an own assets environment, and they are selling volatility and they're selling Bitcoin. So Don't love that sentence right there. I do expect IBIT to base. It surprisingly got a 40 handle on it. I thought it was going to stop right around here. I like the support at around 41. And you're saying, oh, what's the difference? It means something to me structurally, as here we now contending with those mid-April levels. And I mean, that's really just coming off the lows that we had experienced in early Feb. If you remember, $35 on IBIT, around 60-ish K or whatever it is with Bitcoin. So not oversold yet here. I do expect this to base this week at around $40 and have an ensuing bounce on the more pathetic side towards 43. Other thing I will say is I thought when IGV, I think I said this 2 months ago, honestly, when IGV was going to have its close above the 200-day moving average, I said that will probably be, I wouldn't be shocked if Bitcoin starts to wake up. Right now, I am not correct. I want to see if this next rally, I think it's going to have in the next 2 to 3 weeks towards $43. I want to see if it finally, like the slingshot on the rubber band that we just saw on other assets, does it finally wake up for Bitcoin? Because does the FOMO catch up to this one? This one is heavy at numerous levels, at $47. Again, at $44, at $47, and again at $51. I'm not even eyeing the hysteria, the craziness of $72 back from the fall, back from October. So these are significant levels. I would like to see it participate here, but instead, it is deciding to put in essentially 6-week lows. So it's not the performance you like to see. That is IBIT. I wouldn't short it outright right here. Just saying I do see a bounce coming to 43. I'd like for it to do a little bit more to build some confidence. And again, the number 3 worst area to be before we wrap up was Ethereum, down 4.5% for the past 5 days, or an average of 1% a day. And here it's doing just that. Again, just this ugly yo-yo action towards oversold. ETHA, actually, the ETF is getting right to 3-month lows. So even weaker action. This is coming very close within, what is this, 1362. It's about a 10% away from its 52-week lows. Here is ETHA. So again, the way I would see this here is this base is somewhere this week, I would think, tries to secure this 15 handle and have a dead cat bounce till right around that 16 even level. If you, I wouldn't short it, out right here as it tries to base. I'm not seeing the candles get absolutely exhausted and go lower. Can it? Yeah, absolutely. Not my favorite places, nor the markets. Volatility and crypto have been really not good places. The 3 worst actually in the past 5 days. Top 3 trades of the past 5 days: long, short. Long EWY, we are in it. Continue to stay in it. I gave you your stop levels to play it. Long IGV, what a comeback today. Finally looks like to be the first day of close above the 200-day moving average. Programs will sniff this out. This will get strength, beget strength, iron sharpens iron type thing. You're going to see some picking of stocks underneath the hood. Your work days, your sales force, you're going to see some big moves there within the hood. Probably a great time to look inside. And then the third best trade of the past 5 days, ARKG, you're in it, or your boy is in it. New 52-week highs. All right, we'll be back on Wednesday with another video. Enjoy these crazy markets. Peace.